$334 billion in cash and counting. Warren Buffett's annual shareholder letter is out, and here is what we learned.
Yeah, so 6 big takeaways from us. We'll include a link to the full letter in the show notes if you want to read it in full. But if you don't want to read it, stay tuned. Here's what we've learned. Number 1, Berkshire Hathaway, Warren Buffett's company, beat the S&P 500 again.
Just in 2024, Berkshire returned 25.5% compared to 25% for the S&P 500. Regardless of what you say, that is beating the S&P 500. But it's...
I mean, yes, it is. It's factual. But look, since 1965, here's where the numbers get interesting. Berkshire has almost doubled the returns of America's benchmark index, 19.9% a year for Berkshire, 10.4% a year for the S&P 500. Now, if you had $1,000 and invested it in the S&P 500 in 1965, that would be $379,000. That's pretty good. $1,000, one investment, no dollar cost averaging.
That's all right.
That's pretty good.
Yeah, it's good.
But if you had invested it in Warren Buffett's Berkshire Hathaway as he took over that failing New England textile mill, that $1,000, $53.6 million.
That is wild. That is the power of compounding. And that is why when we went to the annual shareholder meeting in Nebraska a few years ago, there are people in that crowd who bought, I think, in 1965 are multi-millionaires, and just love every word he says.
So that's the first takeaway. The second one is investing is about business and business is about people. I think what's really noticeable in this letter is what isn't there. There's no investing metrics. There's no... Where's the 200-day moving average of the S&P 500? There's no what's the price to earnings ratio for the S&P 500. There's no overall macro investing chart. It's all about the companies that he's investing in, and his companies are all centered on the people that he's backing to run those companies well. And there's a few stories in there that we thought were pretty interesting.
So the first one, Ren, is Pete Leigel. He runs Forest River, an Indiana RV maker. He's invested in so many businesses. Berkshire bought this business back in 2005.
The interesting story in the letter was when he bought Pete's company, he asked Pete, "What should I pay you? Whatever you say, I'll pay you."
And what did Pete say?
What would you say?
Shit, whatever you say, I'll pay you. I'd have some sort of profit share, I reckon.
Well, Pete's wife and daughter were also in the room, a lot of pressure to get this number right. Apparently, he had looked up what Buffett pays himself, and he said, "Well, I can't get paid more than my boss, so pay me $100,000 a year. That's what Buffett pays himself. Okay. But give me 10% of all profits above today's level."
Yeah, nice.
So I reckon Pete did pretty well for himself.
He's done pretty well. So then there's Ben Rosner, who was a retailer that ran a business for Warren and Charlie. Ted Combs, who reshaped Geico in a major way. And then you can't go past Ajit Jain, who runs their insurance business, which has blossomed under his leadership. Buffett has said he turned an obscure Omaha-based company into a world leader renowned for both its taste for risk and its Gibraltar-like financial strength.
Nice.
Yes.
So third takeaway from the letter was operating profits were up 27% in a year. Pretty good for a slow and boring business.
Yeah, solid.
So the interesting dynamic here is you mentioned earlier how many businesses they own. I think it's 189 wholly owned businesses now. 53% of those businesses saw profits fall. So that doesn't seem like the setup for a good year.
Yeah.
But despite that, operating profits across the conglomerate increased 27%. And if you look at the breakdown, it's really been driven by two key areas. The first one is insurance, where profit close to doubled. And the second is investment income from insurance. Now, you mentioned in the second takeaway that Todd Combs reshaped Geico in a major way. That's, I think, a large driver of this insurance profit.
Yeah.
And then the insurance investment income is they have so much cash on their balance sheet. They're holding a lot of it in treasuries, and they're getting more income from those as yields rise. Yeah.
Well, the big numbers continue. Lesson number 4, 5% of all US corporate tax is now paid by Berkshire Hathaway. And Buffett does not shy away from this. He's incredibly proud of the tax he pays. They paid $26.8 billion in corporate tax last year, more than any company has paid in US history.
Which actually surprises me because it means that the US government only collected $500 billion in corporate tax last year. I say only, but I just would have expected it to be a lot more.
Why do you say that?
Well, because they run like a multi-trillion-dollar budget. If they paid 5% of all US corporate tax, then they paid 26%.
Yeah, but isn't this the whole thing? None of them pay
I
tax.
know,
They're all off in Ireland and
Yeah. All right, separate conversation.
That's why I think his commentary here. I think he's like somewhat alluding to that. In a way.
Yeah.
It's like America's done well by me. I'm doing what I should be doing.
It is interesting how many finance people idolize Buffett, but don't take this part of him to heart, which is we have a collective responsibility to contribute. There was some quotes in here that people thought he was maybe subtweeting Donald Trump. He had this this passage. So thank you, Uncle Sam. Someday your nieces and nephews at Berkshire hope to send you even larger payments than we did in 2024. Spend it wisely. Take care of the many who, for no fault of their own, get the short straws in life. They deserve better. And never forget that we need you to maintain a stable currency, and that result requires both wisdom and vigilance on your part.
Yeah, maybe a little
Read
bit of a
into
crack.
that what you will, I would say.
Lesson number 5, which is the headline, is that Berkshire is now sitting on $334 billion in cash. The number keeps getting bigger year on year. The speculation as to why it keeps getting bigger year on year. I like the theory around the estate planning and getting ready to buy back his stock if he does pass away. But look, he puts it down to the opportunities aren't there for him at the moment. But yeah, it is a shitload of cash.
So I think to put it in context, I saw this on our Instagram. In November 2023, we did a chart roundup, and we had a chart roundup of Berkshire's growing pile of cash, but it had surged to 157 billion. And that's in November 2023. So 18 months later, and we've more than doubled, and we're at 334 billion.
The cash he's getting from dividends alone is wild.
So it's threefold. It's the operating profits of the businesses. So, as we said, rose 27% last year. It's the cash from dividends. Like the dividend he gets from Coca-Cola each year is more than his original investment in the company. And then the third thing is he's actually been a net seller of stocks. Like he's been selling down, not heaps, not enough for it to be like, oh, there's trouble here, but he sold, a fifth of his Apple stake. He sold some of his banks. And so he's not doing anything with it. Yeah. And even so for people unfamiliar, my estate planning theory is that he is about to execute the ultimate buyback on his death, because that's we can go into it in some other time, but I think it's quite an elegant use of his money. It's really fair to Berkshire shareholders.
Would love it.
But his net worth is only 150 billion. And I say only because in relation to that pile of cash, they could now do a buyback of his whole holdings of Berkshire Hathaway and still have 200 billion in cash.
I know. It's crazy. Anyway, we're super interested to see how that plays out. But to close out, lesson number 6 is that Buffett absolutely nailed the Japan trade. So to read from his letter, he said that a small but important exception to our US-based focus is on growing investments in Japan. I think they have about 6 businesses or 5 businesses that they invested in. So there's Itochu, Marubeni, Mitsubishi, Mitsu, and Sumitomo. All pretty large enterprises. All based in Japan. It's done pretty well from it.
They're all Japanese holding companies, or they're called trading companies, but they essentially are like Berkshire. They're like mini conglomerates, or some not so many, that own a whole bunch of different operating businesses. I think Buffett likes their management style, and he's obviously been increasing his stakes in them for a little while. But I reckon the way he's nailed it, and the particular elegance of the Buffett trade, is Japanese interest rates are so low, like close to zero, basically. And so what Buffett and Berkshire have done is they've gone over to Japan and raised debt in the yen, and then they have used that money to buy shares in these Japanese companies. And so what that has meant is that they're just less exposed to currency fluctuations. But what it has also meant is that their interest cost on their yen-denominated debt in 2025 will be 135 million. The dividends alone they receive from these 5 trading companies, 812 million.
Cash pile.
Yeah. So just like a really elegant way to take the yen risk out of the trade and just, I guess, really arbitraging the lower interest rates over there.
Yeah. If you'd like to read the letter in full, we'll put a link to it in the show notes. And a reminder, he has all of his previous 61 letters available on the very simple Berkshire Hathaway website. No design on that at all.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.